Hello, folks. I have spent better part of my life studying business, analyzing companies, and making investments. And if there is one thing I have learned, it's that good investment doesn't require constant monitoring or excessive diversification. It requires confidence in something truly remarkable. People always ask me, Warren, you have preached about diversification for the average investor. Why don't you diversify yourself? Well, I like to say you only need a few eggs. As long as you know those eggs are in an incredibly sturdy basket. This brings me to Vertex Rapid Virtue Growth Fund, aka VRV. When I look at the financial leaders of VRV, Vaibhav Rohan and Vanchika, I see a kind of strategy that focuses on real sustainable growth. They are not just chasing trends. They are building value with an approach that's as methodical as it is forward-thinking. That's something I respect. Now I have got my fair share of investments spread out, as everyone should. But I'm telling you, if I were to put my trust in one growth fund to handle diversification while aiming for substantial returns, it would be VRV. Their focus on fundamentals and businesses that grow value over the long haul makes them special. They take care of that diversification part for you by carefully selecting each component in their portfolio. If you're looking for a fund you can believe in, that you can trust to grow value steadily, VRV is a name you'll want to remember. So, I'll say this, I don't endorse lightly. But when I do, it's for something I believe in. And I believe in VRV Growth Fund. So if you're thinking long-term, and you're looking for a fund that doesn't just talk about growth, but actually delivers on it, give VRV a look. After all, sometimes it's not about having all your eggs in one basket, it's about making sure you've got the right basket.
Well, thank you, Mr. Buffett. For an amazing introduction, VRV welcomes you to deep dive into the Indian stock market, a region witnessing tremendous growth and poised for further expansion. In today's video, we'll explore the immense potential of the Indian stock market, especially post-pandemic, and discuss a carefully selected portfolio of top stocks from various sectors. By the end, you'll see how this portfolio can yield high returns for smart investors like you. Why choose India?
The Indian stock market presents a robust investment opportunity, distinguished by its consistent growth and resilience through recent global disruptions. Notably, India has one of the world's largest working population and promising substantial economic expansion. India's market sentiment, business climate, financial environment, and overall economic situation are dynamic, with both challenges and opportunities. Positive consumer demand. India's young, large population fuels strong demand, especially in e-commerce, retail, fintech, and consumer goods. Optimistic growth prospects. Sentiments are upbeat, with India's fast-growing economy, though inflation and global issues may cause occasional slowdowns. Rising foreign investment. FDI is increasing, driven by government incentives, reforms, and economic stability, enhancing India's appeal for global investor. India has improved its ease of doing business through regulatory reforms, digital initiatives, and streamlined processes for starting businesses and securing permits. Bureaucracy and complex regulations, particularly in infrastructure, manufacturing, and labor, still pose challenges. The growing digitalization and a vibrant startup ecosystem, especially in tech, fintech, and healthcare, are supported by strong investor interest and government programs like Startup India. India has a growing financial sector with more banks, NBFCs, and fintech companies, and rapid digital payments driven by UPI and financial inclusion efforts. Indian capital markets, NSE, BSE, are mature but volatile, influenced by global conditions, foreign investments, and domestic policies. The RBI manages inflation and interest rates, balancing the need to control inflation while supporting growth. India's financial landscape, characterized by rapid post-pandemic recovery, offers high growth potential. India maintains 6 to 7% GDP growth, driven by consumption, services, and manufacturing, though inflation and global volatility pose challenges. The country's GDP has shown resilience, with rising foreign investments and an expanding middle class. The government is implementing structural reforms, including goods and service tax GST, labor law changes, and the PLI scheme to boost manufacturing. Investments in infrastructure, aim to enhance connectivity and support growth. While investing in development, India is focused on managing fiscal deficits, with its debt-to-GDP ratio remaining manageable.
Is India's economy on par with its Asian counterparts? Let's focus on the broader perspective. In modern times, India has the largest working population, and because of this, the country is expected to grow in the upcoming times. As of November 6, 2024, the Indian stock market has outperformed several other major Asian markets. India's stock market has demonstrated superior performance compared to other major Asian markets in 2024, driven by strong economic fundamentals and investor confidence. India's GDP growth has been resilient, attracting both domestic and foreign investments. Indian companies have reported robust earnings, boosting investor confidence. Government initiatives aimed at economic reforms have created a favorable business environment despite global uncertainties. India has continued to attract significant foreign direct investment. While other markets have faced challenges, India's proactive policies and economic resilience have positioned it favorably in the region. India's financial market is diversifying, with an increased focus on tech-driven investments. However, compared to Asian markets with mature equity systems, India's financial landscape has unique challenges and opportunities. Although smaller than China's economy, India's market capitalization has been closing the gap. Its contribution to the MSCI Emerging Markets Index rose to 18%, approaching China's 25% share. This rise is attributed to strong domestic demand, government-led infrastructure investments, and substantial retail investor participation. Building relations with other Asian countries can make India one of the most attractive potential economies in the region. Because of this potential, India has been chosen for this portfolio. Now that it is established why India is the market of choice, it's time to dive into stocks. After evaluating over 20 companies in different industries, considering their financial health, market potential, and alignment with India's economic growth trends. After thorough analysis, we selected these 10 stocks because they each play a pivotal role in a sector that is driving India's future. The healthcare sector in India is rapidly expanding, driven by increasing demand for quality healthcare services, growing medical tourism, and digital health adoption. Apollo Hospitals represents this sector, addressing healthcare access and innovation. Apollo Hospitals is considered a leading business in the healthcare sector, operating small stores, diagnostic centers, and hospitals. A rapidly growing population is expected to generate more demand for the healthcare sector. This creates growth opportunities for the business. India's push toward energy self-sufficiency and renewable energy investments makes the power equipment and engineering sector essential. Bharat Heavy Electricals Limited, BHEL, is crucial in supporting large-scale energy infrastructure projects, including renewables. BHEL produces heavy electronic equipment and goods. In a growing economy, the demand for electrical requirements is also expected to grow. Due to this reason, this business has been chosen for the portfolio. With rising mobility and agriculture needs, companies like Mahindra and Mahindra cater to both urban and rural markets, including electric vehicles, EVs. This sector benefits from India's focus on agricultural growth and sustainable transportation. Mahindra & Mahindra is a leader in the automobile sector of India and currently focusing on developing EVs. Awareness about sustainability and government motivation is creating demand for the EVs, hence, this business also has considerable growth opportunity. India's IT sector, led by companies like Infosys, remains at the forefront of global digital transformation, cloud computing, and AI. It drives growth by helping companies worldwide adapt to a technology-centric future. Infosys is a multinational company operating in the IT sector. India has a strong presence in the IT sector, and it's growing over the years. Due to this reason, this stock has been considered. The aerospace and defense sector supports India's national security and self-reliance. Hindustan Aeronautics Limited HL plays a key role in defense manufacturing, benefiting from government incentives and high defense spending. ALC is considered as the main organization in the Indian defense sector, receiving large government contracts. In recent years, India is having border issues with its nations such as China and Pakistan. Due to this reason, HALCI is expected to receive large contracts, hence ensuring their growth. With one of the world's largest data user bases, India's telecom sector is expanding rapidly. Bharti Airtel's growth aligns with the push for 5G rollout and increasing digital connectivity across urban and rural areas. Bharti Airtel is one of the most recognized mobile network providing brands in India. It operates throughout the country. This makes it one of the most attractive investment options in the Indian market. As a global pharmaceutical hub, India's pharma sector meets both domestic and international demand. Sun Pharmaceuticals represents this sector, capitalizing on the rising need for affordable generics and specialty medicines. Sun Pharma is one of the main pharmaceutical companies of India and has presence in the international market. The business is well recognized in producing generic medicines. Due to its market recognition and growth opportunities existing in the healthcare sector, this company has been chosen. This sector covers companies involved in the research, development, manufacturing, and distribution of medications and healthcare products. Cipla is one of India's leading pharmaceutical companies, with a focus on producing affordable, high-quality medicines, both generic and specialty drugs, across various therapeutic areas such as respiratory, oncology, cardiology, and antiretroviral treatments. This is another organization working in the pharmaceutical sector. The business is well recognized for providing respiratory, antiretroviral, and chronic therapies. Infrastructure growth and green energy initiatives are critical to India's sustainable development. Adani Enterprises drives large-scale renewable and infrastructure projects, aligning with the country's energy and environmental goals. Adani operates in the energy production, infrastructure development sector, and logistics sector. The demand of infrastructure and energy and logistics are expected to increase parallel to the development of India. Considering future opportunities, this stock has been chosen. With India's rapid urbanization and infrastructure push, cement demand is rising. Ambuja Cements plays a pivotal role in supplying materials essential for construction and real estate, supporting the sector's growth. Ambuja Cement is vital for supporting the country's large-scale infrastructure growth. Known for its quality products and sustainable practices, Ambuja Cements has carved out a significant position in this sector by focusing on innovation, energy efficiency, and environmental responsibility. These portfolios are designed for long-term growth and balanced risk return, combining high-growth sectors like technology and industrial materials with stable, low-risk sectors such as renewable energy. Large-cap auto stocks add resilience, benefiting from economic recovery and consumer demand. With a mix of high and low beta stocks, the portfolio remains adaptable, providing growth potential while reducing volatility in various market conditions. We've undertaken on over 300 investment portfolios. All the portfolios show average return of 30% and are above the SML, applying rigorous evaluation techniques, including Markowitz's efficient frontier model. Our objective was to isolate portfolios that not only maximize returns for various risk appetites, but also stand resilient in different market conditions. Through this analysis, we've honed in on 10 portfolios that embody the diverse needs of today's investors, and out of those, 3 portfolios emerged as particularly suitable, based on varying investor profiles and risk-return goals. Today, we'd like to share insights on each of these options to illustrate the unique value they offer. The data analysis using the Capital Asset Pricing Model, CAPM, helps identify the portfolio's risk and return characteristics. At the same time, the risk is kept within the acceptable levels for the fund's strategy and goal of achieving sustainable long-term growth necessary for building the extensive portfolio. The first portfolio is designed for investors who are willing to take on higher levels of risk for the potential of maximum returns. We've strategically allocated across 3 sectors, achieving a strong return of 52% with a calculated risk exposure of 75%. The portfolio's beta of 1.346 reflects our approach to capturing market movements, positioning it for high growth while maintaining a balanced risk profile. This combination offers robust performance potential in both stable and dynamic market environments, making it a resilient choice for long-term wealth building. Our portfolio offers a well-diversified mix across 10 stocks designed for those seeking both stability and growth. With a 31% return and risk level at 72%, it provides a balanced investment approach. The portfolio beta of 0.612 underscores its suitability for investors preferring moderate exposure to market fluctuations, offering lower volatility. This strategic mix makes it ideal for those looking to benefit from consistent performance without high-risk volatility, an excellent choice for steady, long-term growth. Finally, we have our third portfolio. It strikes a great balance between growth and controlled risk, with a 42% return and risk level at 60%. Its beta of 1.153 reflects a moderate sensitivity to market shifts, ideal for investors looking for both growth and a touch of resilience. By carefully blending high-return assets with a manageable risk, this portfolio is well suited for those aiming to capture market gains while maintaining a steady performance trajectory. The performance of the portfolio and its estimation also offer visibility on the future sources of growth and income, because expected returns and yields obtained from the different assets are part of the portfolio. It can be seen that the portfolio return for the upcoming 300 months or 25 years will fluctuate over the years. Altogether, the portfolios are expected to produce a long-term capital appreciation and relatively moderate income for investors interested in a portfolio that offers moderate income and capital appreciation in the long run. By conducting the portfolio review frequently, the situation in new markets may be reflected, and further high results maintained in the fund strategy may be achieved.